The world runs on a quiet agreement. A single currency sits at the center of global trade, global debt, and global power. That currency is the US dollar. Now, here's the uncomfortable thought. What if it stops being the world's money? Not slowly, not politely, but because trust cracks, alternatives rise, and the system shifts. This isn't a sci-fi scenario. It's a question economists, central banks, and governments are already planning for. Let's walk through what actually happens if the dollar loses its global throne. First, what does it even mean to be the world's money? The dollar is the global reserve currency. Oil is priced in dollars. Global trade is settled in dollars. Central banks hold trillions in dollars as reserves. Global debt is issued in dollars. Even countries that hate US politics still use the dollar because the system is built on it. This wasn't always the case. In the 1800s, the British pound ruled the world. The British Empire controlled trade routes, finance, and global banking. Then, wars, debt, and economic decline slowly pushed Britain aside. After World War II, the United States emerged as the dominant economy. In 1944, the Bretton Woods system made the dollar the anchor of global finance. Even after the gold standard ended in 1971, the world kept using the dollar. Not because it was perfect, because it was stable, liquid, and backed by the world's largest economy and military. So what happens if that changes? Start with trade. Today, most international trade is priced in dollars. If the dollar stops being the main currency, companies would need new pricing systems. Oil might be priced in euros, yuan, or a basket of currencies. Shipping contracts, commodity markets, global supply chains would all need rewiring. This sounds technical, but it's massive friction. Think of every business on Earth suddenly switching accounting systems at once. Next, debt. Trillions of dollars in global debt are denominated in dollars. If the dollar loses dominance, lenders might demand repayment in other currencies. Borrowers would face exchange risk. Some countries could collapse under currency mismatches. Debt crises would spike, not because debt grew, but because the rules changed. Then, US power. The dollar gives the United States a superpower economists call exorbitant privilege. The US can borrow cheaply. It can run massive deficits. It can sanction countries by cutting them off from dollar systems. If the dollar loses reserve status, that privilege shrinks. Borrowing costs rise, sanctions weaken, US influence declines. That's not just economics, that's geopolitics. But the story doesn't end with the US. Instead of one dominant currency, you get multiple spheres. A dollar block, a euro block, a yuan block, maybe digital currencies controlled by central banks. Trade becomes regional. Financial systems become balkanized. Global liquidity shrinks. That means slower growth, more volatility, more political tension. Now let's talk about your money. If the dollar loses global dominance, what happens to prices? Imports get more expensive. Inflation rises. Interest rates climb. Stock markets reprice. Your mortgage, your investments, and your job are tied to global capital flows. When the world rewires its money system, nothing stays untouched. But here's the twist. The dollar doesn't need to collapse to lose dominance. It can fade. China is pushing yuan-based trade. Europe is strengthening the euro. Countries are building alternatives to SWIFT. Central banks are experimenting with digital currencies. None of these kill the dollar, they chip away at it. And history shows reserve currencies decline slowly, then suddenly. The British pound didn't crash overnight, it weakened over decades. Then World War II accelerated the shift. Shocks accelerate transitions. A financial crisis, a geopolitical war, a debt spiral, a technological leap. Now, zoom out. Why does the world need a dominant currency at all? Because global trade needs a common language. Without it, every transaction becomes a negotiation. Every contract becomes a currency bet. Every investment becomes a geopolitical gamble. The reserve currency is global financial infrastructure. Remove it, and the system doesn't collapse instantly. It fragments, slows, and becomes more fragile. But there's a deeper question. Is the dollar losing dominance inevitable? Some argue yes. Empires rise and fall. Currencies follow power. Others argue no. The dollar has unmatched liquidity, deep financial markets, rule of law, and global trust. Alternatives lack transparency, stability, or openness. Reserve currencies are not chosen by speeches. They are chosen by markets, institutions, and trust. Trust is slow to build and fast to lose. And that brings us to the uncomfortable part. The dollar is not just paper and digits. It's a story the world believes. A story that the US will honor debts, that markets will stay open, that institutions will remain stable. If that story cracks, the shift could accelerate. So what happens if the dollar stops being the world's money? Global trade rewires, debt systems shake, US power declines, financial markets fragment, volatility rises. But something else happens. A new system emerges. Not cleaner, not simpler, just different. Multiple currencies competing for dominance. Digital currencies reshaping control. Geopolitics baked into every payment. The world becomes more multipolar, not just in politics, but in money. And here's the unresolved question. Is a world without a single dominant currency more stable or more dangerous? Because when money becomes multipolar, power does too.